Hello, my name is Jordan Gamble. I am going to present to you on the topic of Legacy PC, where we competed with 5 other companies to see who could most effectively compete in the marketplace. And it wasn't just a question of market share, as most people would assume. I had a good portion of the market share. I would say I was in the top 2 or 3, but the other performance metrics didn't match up, so I didn't perform that well. So that was interesting. Lesson learned. So let's go back to the beginning. The idea for the company started. Elon Musk is my role model. He inspired me to think of this idea. Why don't we build laptops and get people off their desks and allow them to be free to go anywhere they want and work anywhere they want in the world and connect to the internet. And so this idea was founded on that principle, and as such we tried to market to travelers, people who are taking their laptops, want to be portable. The second market we targeted was people who, were stuck at their desks, who office workers, clerks, secretaries, those kind of people. And then we didn't even bother touching the high-end engineering-based market, mainly because there didn't seem that much demand initially, which changed over time. The demand for that product actually increased above the other products. So that was a very interesting change in the market, which we did adapt to. We shifted our priorities to start making more of those. We did 3 different brands of that same computer, so that definitely changed. However, we didn't switch up our priorities in terms on the software side of things. So the software did its calculations based on our priorities still being the traveler market, which was no longer a priority. So we ended up not doing that well because of that. So with that said, let's jump into the results of our hard work. So total performance, you got to balance your current revenue, your profitability with the future opportunity, with investments in the future R&D, opening new sales locations, sustainably scaling up your future manufacturing capabilities. All of that's important to staying in business long term, but you've got to balance that with the firm's profitability in the present case, the cash management, financial resources. All of that makes a big difference in the present time. And so balancing that requires a lot of decision making in a lot of different areas, such as marketing, production, operations, human resources. It's a lot. So let's jump into it. Overall, we scored 0.4, while other people scored 35.51 was the highest cumulative score performance. So not great. However, if you look at specifics, we did do really well in the investing in the future, R&D. We scored top of our competition there. We also scored in the top competition for manufacturing productivity. And that's kind of reassuring, because I actually am a manufacturing engineer at Boeing, and so reinforcing that I do kind of the skills I've learned in college as a manufacturing engineer degree, that kind of reassures me that it's somewhat helpful, even though I failed at these other areas, such as wealth management, which is really just stocks, and we'll get into it later. marketing effectiveness, market performance, all of that we'll discuss later. The two areas that we did do kind of well in, we got third place, is asset management and financial risk, which again we'll talk about later. So without further ado, let's discuss market performance. So this is really dependent on stockouts, which we had a lot of. I opted for a very safe manufacturing, low fixed rate capacity, mainly because I did not want an inventory. That was kind of a rule I had, no inventory ever, kind of a just-in-time, lean manufacturing process where we only produce what we need, and as a consequence of that, I wasn't able to produce what we needed because we didn't have that capability, so we had a lot of stockouts. This was bad mainly because we spent a lot of money on sales and trying to market to people, but then we didn't have any products to sell to them. And this also created ill will because people were frustrated. So not great. And then the other problem was it's based off of your primary and secondary segments, and I didn't switch over my primary and secondary segments at all. I left them as they were in the beginning. So we were targeting the traveler segment when we should have been targeting the Mercedes segment, the more high end, because that one actually grew faster. So you can see here market segment size. Initially, the Mercedes was slow. It was less, but then in Q4 it skyrocketed, doubled, jumped way above in Q5, and in Q6 it was the highest. So really in Q5 I should have noticed that, changed my strategy, changed my priorities, and that would have increased this market performance metric. Market size as a whole, obviously pretty big market, 15,000, which we'll discuss later. Marketing effectiveness. So our overall appeal was pretty good. However, our overall marketing effectiveness was not great. And again, that's because we spent a lot of money investing in marketing, in branding and advertising in the wrong metrics, in the wrong segment. We spent it in investing in the Mercedes brands, and that wasn't our primary and secondary market segments. So that was a mistake. And then obviously demand, in the last quarter, there was more demand in the sales office. That was interesting to note that the sales offices had, 3-4 times the web sales. So we definitely put a lot more people, when we saw that, we put a lot more people in the sales offices than we did in the web sales center. And then the demand created for portable PC, that was a traveler market, 1,000, pretty good. Secretary, that was the workhorse segment. And then these engineers PCs, those were all workhorse. Mercedes, that was all Mercedes segment. So it's interesting to note that there was equal demand for all of these. These were pretty much all the same. I think only one had, this one had games and this one had some other non-consequential thing, but you can see that all the demands are pretty much the same. So but what changed is I changed the price, and so you'll see down lower that the profits on these really expensive ones was astronomically higher than these lower priced ones, although they were the same pretty much PC, same cost to manufacture. So definitely pricing our products higher would have been good. which we didn't. We pursued a low cost, low price competitive strategy, and it didn't turn out the way I'd hoped. I hoped that pricing our products lower would increase more sales, but as you can see here, that's not true. Demand does not equal price. It doesn't seem to equate or correlate at all. So again, a lot of ill will. We had 81 units, 70, 219 units that we could have sold that we just didn't make. So this is interesting. So market share, I thought was the go-to. I thought market share was like, oh, that shows you're succeeding. So 22%, I'm second place. There's somebody ahead of me with 28%, and I'm tied in second place with 22%. So I thought that was great. I thought, oh, I'm second place. But these other metrics of performance actually show a better picture of how your company's doing than just market share. So, for example, in the workhorse category, we had a 19% shareholder or share, what do you call this? Market share. In the Mercedes, which is the high-end share market, we have 20%, which is pretty impressive given that we started into that field pretty late in the game. I think in the fourth quarter. Let's look at this. Market share, Jordan. They don't break it down by what share, by shares. That's just blue is just the total shares. Market share. You can see actually I had more market share in the beginning when I was solely focusing, and then I kind of lost some, and then when I diversified, I kind of lost some more. So definitely focus and finish seems to be the secret there, because at the end there I ended up with only 28% market share in the business traveler segment. Not great. I had 44%, so it was pretty good. Moving on. So in the sales department, you can see our sales offices actually did really well. The web channels did not do as well. So you can see that here. Gross margins. Again, you can see the really expensive computer. It's sales wise, they all, well, actually this one, the sales generator was much higher. However, the cost of goods sold was higher. So that's just because we sold more. That doesn't actually, quite a few stockouts, 312 stockouts over the whole time. So this is the whole period from start to finish, the entire time that the company was in business. So again, a lot of wasted effort here, spending money on sales when where we should have been spending the money is in manufacturing, building up our capacity so that we could make. We were at max, we'll get into it later, but we were at max manufacturing capacity the whole time, really efficient, but our fixed operating capacity was at the minimum. So not great. Let's go to financial performance. So Legacy PC ended with a 7.25, which was not great. Obviously, it's not the worst, but interestingly, we tried to do a price we tried to compete based on price. So we were the lowest price in the traveler segment. We were lowest in the workhorse segment. That's the secretary. And then we also had the lowest price for the high end. And yet we still did not sell more. I would say we didn't capture more market share because of that, which surprised me. So lesson learned here is you can actually sell. Where's my other one? Engineer. Here's one we priced it at 4,000, 3,000. These two sold just as well as this one priced at 2,000. So what we should have done is priced them all at 4,000, and we would have, in theory, sold that many. Unless, of course, some people buy the 2,000, some people buy the 3,000, some people buy the 4,000. So maybe you do need that price difference, even though they're really the same computer. So people are buying based on price, which doesn't make sense. So I don't know. Maybe we're overanalyzing it. Channel profitability. Again, when I realized that the sales office was selling, I mean, they had a profitability of 500,000, and the web online sales was at negative 52,000. I realized, wow, really, this is where we should be investing our time. So that's where we spent most of our money in hiring people. We only had like 2 people on staff in web, but maybe that's the reason it didn't do so well, is we didn't have enough staff. Brand profitability, again, this one that we priced high at 4,000, we ended up having a profit per unit of $2,000 almost, as opposed to the one that was priced low, same model pretty much, just priced lower. It had a profit margin of $50. So obviously a $2,000 difference in price equal to about a $2,000 difference in profit. Clearly, it's hard to justify keeping this one when the profit is so much more than the other one. Overall, firm profitability, we really did well in the 5th quarter, but then for some reason we dropped back down. I think because our R&D cost so much. We did more R&D in the last quarter. I'm not sure. Yeah, I think so, because in the 2nd quarter we did a lot of R&D too. So that must have affected this profitability. Financial risk. So debt is bad, right? Well, I had a lot of debt. In fact, I had to take a $2 million, pretty much a $2 million, where is it? 2 million. I don't see it in the, what is this, the income statement? Yeah, this is not in it, so that's not it. Overall, we did do 3rd best, which is not bad. Makes me wonder why the other people had so much debt, given that they did so well in the other areas of their game. So cash-wise, we had a ton of debt, or cash, mainly because we took a massive loan out in the 4th quarter. I think we took a $3 million loan out, in addition to being given like a $4 million from the investors. So we got an influx of $7 million. I think that's coming. It should show somewhere, but it's not. Maybe we spent it. I'm not sure. This is the cash flow. So this should show repay emergency loan. Yeah, here's the emergency loan. Here's our cash. So we're repaying the conventional loan. Here's our borrowed conventional loan. Yep. And here is our interest in increasing common stock. So in 1 quarter we got $7 million, almost $8 million. And then we slowly repaid it. But again, I'm almost tempted to have kept the $3 million so that we wouldn't have done the emergency loan. There's a lot of reasons why companies go bankrupt, and having cash is definitely a plus. So I think in the future I definitely will keep money on hand, rather than live paycheck to paycheck. That does not bode well. So we did really well. We were actually the best in investing in the future. Problem is, we did not retain any of our money. We just invested it into the future. So that's why it looks, from the investors, it looks terrible. Our retained earnings just plummeted the whole time. So I think there could have been a better balance between research and development and showing the stockholders that we had their best interest in mind, and that we were, we weren't just taking all their money for operating day to day. Our balance sheets, industry finance ratios. So for wealth, this has to do with expenses can exceed revenues, leading to losses and retained earnings figures that are negative. Value greater than 1 indicates a firm is adding wealth to stockholders. So I didn't do this at all. I added zero wealth. In fact, I spent all the money that the stockholders gave me. So that was not great. You can see here they invested $2 million, $1 million, $1 million, $4 million, and then finally we had to get a $2 million loan. So not great. Pretty bad. Pretty low score. For asset management, we were third best overall. And again, this has to do with creating sales which are 2 to 3 times the value of the assets. So, for example, I would build a sales office, and then that would generate more sales. So that's an example of asset management. The problem was, why I got this low score, or I didn't get first, was we had low inventories. Low inventories is good. So that we scored well on. But then we had a bunch of stockouts, and those affected our scores. So that was a big problem. And inventory, as you can see, we had zero inventory. Obviously this doesn't matter because we had no inventory stored. The cost, that is, cost per unit doesn't matter. Cost per capita, production cost per unit, total demand. This is interesting because we didn't. So most companies, I think, invested more in certain computer components because they viewed that the engineers would want the faster hard drive, and the secretaries would want the lighter laptop, and the secretaries would want the more comfortable computer keyboard, and the travelers would want the more portable laptop. I, however, didn't really differentiate those areas. I just kind of kept all my laptops pretty much with the same components. As you can see, they're all pretty much the same costs. I didn't really differentiate the price that much. I more went with the reason I did that was I went more for standardization in our manufacturing, in theory. So if all my computers were produced the same way, it's kind of like McDonald's. You make the same thing over and over again all across the world, you get better quality that way, versus trying to make 3 different types of computers with different components. You've got different suppliers, different sourcers. It can get messy. So I tried to keep our costs low by standardizing the manufacturing process, design, all of that. We can use the same design in all 3 computers and market to different segments. Consequence is they all cost the same. So that was interesting. I guess I could have priced them different, even if they did cost the same. For manufacturing productivity, we were the best. So we had really good low inventory, which is kind of how they measure this. The only problem is we had we had zero excess capacity, but that's because we were maxing out. Where is it? Um, so fixed capacity was 75, and we were at 70 units the whole time, pretty much. You can see here capacity utilization, pretty much at 70 the whole time. I believe that's the one. Interestingly, production costs went up. I think that's because the R&D went up and we invested more in computer chips, and the computer chips cost more, so that was unspoken. Which brought up one strategy idea was, what if you didn't do any R&D and you just kept all your components to basic and you just sold like the basic cheapest computer on the market without any R&D? Would that be a good strategy? I don't know. It's interesting. Keep your costs low that way. Human resources management. So kind of went with a Walmart style management style, which is not great. But yeah, we had the lowest cost of employees ever. Mankind paid them only $24,000 a year total. Salary at $21,000. For the production workers, they were paid at $13,000 a year, which is like, ugh, not good. You cannot raise a family on that. I guess I kind of justified it because I was like, oh, there's a startup. They'll make more money later on. But you can see the productivity was really low. Everybody else had higher productivity. So this would have been, I think, rather than investing in more salespeople, why didn't I just pay them the ones that I had more, get more out of them? So again, this would have been a better. I guess I would change my strategy on this one. And finally, these are just some charts that show the profiles and the tactical plan. So without further ado, I will end the presentation here. Thank you.